So today I wanted to talk about ULTY, the whole situation with the NAV of ULTY that had like a mini crash last week, and it just caused a big panic in the community. Personally, I'm pretty neutral. It's like I don't care. It's like I invest into ULTY personally because I'm kind of curious and I think the fund is pretty cool and it's pretty innovative and it's one of a kind. But I don't have feelings towards ULTY. Like I don't care. Like people hating on the videos and putting negative comments about this fund, and I feel like there's a war. Like people are like, yes, ULTY is good, and some other people are saying that ULTY sucks. And then we have this situation right here where, as you can see, when ULTY is flat, when ULTY is at $6, everyone's saying that, oh my god, I'm getting rich, throwing all my money into ULTY. And then last week, the markets were a bit down for XYZ reason. Whatever underlyings were under ULTY went down. The NAV of ULTY went back in the $5.90. And then, oh my god, panic. People are selling out of ULTY. People on Twitter, people on Reddit are saying that ULTY is trash. They're starting polls saying, do you guys think that ULTY is going to go back up, or do you guys think ULTY is going to be stuck now and it's never going to go back to $6 anymore? And 3 weeks ago, people were saying, you better buy ULTY now before it goes to $7. And I want to talk about this situation. I think a lot of people don't actually understand what is ULTY. People just throw their money into ULTY and they think that magically YieldMax is generating 85% yield on a weekly basis and there's no possible risk and there is no reason why they're making that much yield. The thing is, the reason why they are able to generate 85% yield on a weekly basis is because their underlyings are very volatile. And when the market is doing well, since they're more volatile than your traditional S&P 500 index and they're single stocks, and inside of ULTY you have 15 to 30 holdings all of the time, most of the time. Obviously, when market is doing well, ULTY is going to do very well. But when the market is going to be down, ULTY has the potential of going down. Like there's no magic recipe against downside, and market doesn't go up all the time. And I feel like some people don't understand that the market goes up, goes down. But the thing is, in the long run, if you're a long-term investor, quality stocks always go up over time. Quality companies are always doing well, and they're public. They're doing their best to generate as much revenue, as much profit, and all these things. And if they're doing bad, they're going to crash. Their stock is going to lose value. So all of these public companies that are very volatile and that ULTY is holding, like they're backed up by something and they're going up for a reason. They're doing well, but they can't always go up like a straight arrow, or else it would be too easy. Quick little pit stop here. Just wanted to say that YieldMax tweeted on August 18, 2025 at around 12:30 p.m. that SLTY is going to be launching on Thursday, August 21st. So Thursday of this week, if you're watching the video as soon as it came out. If you're new to my channel, I just released a video where I go over SLTY, I go over the prospectus, and I go over what I think about the fund and all these things and explain a bit how this is supposed to work. But just to give you guys kind of an overview of how this is supposed to work based on everything that they wrote on their prospectus, I made a video covering that. Now, just to go back in the video, people are panicking. Like if we go here and we look 5 days ago, oh my god, there was a crash. ULTY was $6.07 and now it's down 2.7%. It's down to $5.90. First of all, on the ex-dividend date, a given stock that is paying out a distribution or a dividend is going to go down by the amount that it's paying out. So that is the first factor. And the second factor is that last week, most of their holdings were probably red. And that is why ULTY went down in value. And why did they go down in value is because of their underlyings. And it's not more complicated than that. If you're holding ULTY and you don't 100% understand what is actually happening with that ETF, you can go ahead on ULTY's website, download all of their holdings, import that into a spreadsheet, and go through them. And you can go look at these companies, and no one is forcing you to buy ULTY. If you're not comfortable with these holdings, you don't have to buy ULTY. And as simple as that. And ULTY, as you know, and I'm just going to repeat myself, what they do is they're basically scanning the market on a daily basis, on a weekly basis. Whenever they see a high quality, high volume, liquid stock that is very volatile and everything, and that they think is a good opportunity to trade, they're going to be pulling it into ULTY. They're going to actually hold ULTY. Current strategy into ULTY, even though they're allowed to trade different kind of option strategies based on what they wrote in their prospectus, what they're doing right now with all of their holdings is they're doing callers. It's a way to generate income while kind of de-risking the downside of a stock. So they're going to be buying a put at a lower strike price and they're going to be selling a call at a higher strike price. So when you sell a covered call, as we all know, you're generating income, but you're capping the upside. Also, if the stock goes down, you're getting all of the downside. But now, since you're buying a put, if the stock goes under the price of the put, you're allowed to sell the stock for that price of this put. ULTY is holding very volatile stocks. It is a very good thing that they're doing that because those stocks are swinging 4 or 5% in a single day up and down, and you don't know what's going to happen with the price of that stock at the expiration of their options. So at least they're protecting themselves from the downside, and they're really mitigating as much risk as possible while being very aggressive with their income strategies. So then we can keep getting that 10 cents per share. And as long as the holdings that they're pulling into ULTY are doing good and they don't all crash at the same time, the price of ULTY should be stable. But then the thing is, if we're having a very bad market condition and everything into ULTY goes down week after week, it keeps going down, ULTY is still going to be able to generate income, but probably not as much. Unfortunately, the price of ULTY can't go up because all their underlyings are not going up. So that's just what's happening. Like, ULTY is not crashing. The reason why ULTY was down is because of XDiv, and also all of their holdings went down. Probably most of their holdings went down at the same time and all these things. If a majority of their holdings is down, ULTY is going to be down as well. So that's just how it is. I pulled up all of ULTY's holding, and for example, if we look at their top holding today, it is AST Space Mobile. As we can see, they're basically holding 3.5 million shares of ASTS, and they are fully written, selling covered calls on 100% of their holdings, and they're also buying puts on 100% of those holdings. They're capping the upside on the full holding of ASTS. Here, the negative here is the call that they're selling, so C51. So they're selling a call at $51. They bought this stock for $48. They're selling a call and they're capping their upside to $3 per share. So if the stock goes up more than $3, your upside is going to be capped, but you're still going to get that income. And on the downside, they're buying a put at $45.50. So they're actually protecting the downside on $2.5 per share. If the stock goes down more than $2.5 per share, on the downside, you have $2.5 per share max that you can go down. And on the upside, you can go up $3. Here, obviously, the best scenario is that the actual price of the stock stays above $48, then we can receive all the premium possible from that covered call. And even though we're protecting the downside, we don't want any downside. That would be the best case scenario. So now, as you can see, they bought it at 48 bucks. And just here today, it opened at $48.03. It went up 5%. It went up to 50 bucks. And it's already down on the same day. It's already back down to $48. So as we can see, the holdings inside of ULTY are very, very volatile. And as an investor of ULTY, the reason why you're getting so much premium, the reason why ULTY is able to pay on a weekly basis 10 cents, that is annualized around 85%, is because their underlyings are super volatile. And that's the reason why they're able to generate so much premium. Is they're so volatile that all of those calls that are selling are super juicy, and they're able to harvest a lot of premiums from those single stocks they're pulling into ULTY. Just to repeat myself, if you're holding ULTY, you have to be comfortable with the fact that all of their underlyings are very volatile, and they can go up a lot, they can go down a lot. But you have to also understand that ULTY is trading callers. Their goal really is to protect you guys, protect the investors from the downside. But obviously they have a bullish bias, so they're pulling AST because YieldMax thinks that AST is going to go up. And now if we look at their second biggest holding, which is Rigetti Computing, which is super, super volatile as well. They have almost 10 million shares, so it's pretty crazy. It's currently weighing 5% of ULTY. They're buying puts at $16 on 100% of those shares. So 100% of those shares are protected from the downsides. And then for the covered calls, they kind of split it in half. And for the covered calls, they kind of split it a little bit. I guess that's something that they wanted to do to get more income. And so 2/3 of those shares are covered at $18.50, and then the other 1/3 around is covered at $17.50. So this is what they have open right now in terms of options for Rigetti Computing. This one is protected. If Rigetti crashes under $16, our downside is very protected here. We can't go down under 16 bucks as an investor into ULTY, so that is very good to see. And then for the covered calls, they're generating a bunch of premium and they're capping the upside. Around 2/3 of the upside of that position is capped to $18.50. Another third of that position is much closer to the current price, so it is riskier obviously, and as you can see for the price here, it's generating twice as more income, and that one is capped to $17.50. Currently, Rigetti Computing is at $16.70. So in terms of upside, we are not capped yet on their calls that they're selling, since they're selling at 17.5 cents and 18.5. So in terms of upside, we're good, and in terms of downside, we are good as well. We're not using the puts yet. The covered calls are currently not capping the upside of Rigetti Computing. And just to see here how volatile this one is, just today it went down 3%, then from there it went back up 5%. Currently it's down another 1.8%. So if you compare this, for example, to the S&P 500, which we don't really see more than a 1% movement a day. This one is very, very volatile. So just to repeat again, when you invest into ULTY, you have to be comfortable with the idea that the underlyings inside of ULTY are very volatile as well. And that's the reason why they have collars. The collars kind of lowers the volatility, because if something very bad happens, and as you can see, these ones move a lot. So I feel like putting a lot of money into Rigetti computing, you have to be comfortable with the fact that your investments are going to go up and down 5% on a daily basis. You have to know what this company is about, and you have to believe in this company. So they're really protecting us from the downside, and they're really trying to capture as much income possible without capping the upside when possible. Obviously, since ULTY is covered calls, the upside is always going to be capped in exchange of income, and the downside is going to be protected by these puts that you're buying. So now, is ULTY ever going to recover? I think that ULTY can recover, as we saw, if we actually go dig into the holdings and look for ourselves. The top two positions of ULTY right now are not capped on the upside. So by the time the option expires, these options are expiring this Friday. If the option expires and the underlyings are all up, then we're going to be capping the upside. Those covered calls that they're selling are still out of the money. So ULTY still has some breathing room for upside capture, but not as much as actually holding the underlying. I think that ULTY is still able to recover. When you invest into ULTY, this is the risk, is that the upside is capped. The downside is also capped. But if the underlyings are down, ULTY is going to be down. And ULTY is obviously always going to struggle to recover, and it's not going to recover as fast as a growth position or a position where you're not capping the growth, because as we saw, ULTY is all about income. So obviously they don't really care about having breathing room for growth. 100% of their positions are written off on covered calls and on puts. So they're capping 100% of the holdings. They're not just holding stock. If you want growth, you shouldn't be investing into ULTY. ULTY is all about compounding your distributions, buying as much shares as possible week after week. And that's kind of how ULTY is working. ULTY is all about compounding your number of shares. And if you want to compound the price of your investment, the growth of your investment, there's much better ETFs out there for the growth purpose. So is ULTY going to go to zero? No. As we saw, if we understand how they're trading, I think they're doing a good job. I think that they're protecting us from downside. But unfortunately, if the market is doing bad, if 15 to 30 of those ULTY holdings all go down, ULTY is going to go down. Even though the downside is capped, you can't make magic, and you can't make the downside. You have to take risk to make income. So that is ULTY. And well, let me know what you guys think in the comments. I'm curious to see what my subscribers and what people watching this video think. I think most of the people that are following me are pretty positive about ULTY, and most of you guys really understand how it works. And hopefully, if you didn't really understand how ULTY works and you're kind of panicking about selling ULTY, or you thought ULTY was going to zero, hopefully this will maybe help answer some questions or understand some things better about ULTY. Or maybe you guys are actually going to go dig into ULTY holdings and you're not going to like what they're holding. It's too volatile for your likings and you prefer something more stable with a lower yield. If that's the case, I'm glad that you learned something from this video, because obviously, yeah, ULTY is very high yield. It's an alternative income. It's a crazy ETF. It's one of its kind, especially now with SLTY coming out. It's going to be even crazier. These two ETFs are really one of their kind. So it's really not for everyone, and everyone has their own risk tolerance. So, only invest in this if you're comfortable and if you really understand what's happening. That was it for the video, guys. If you enjoyed it, leave a like, subscribe if you want to support me. I really appreciate the community. Keeps growing and growing and growing, and I keep getting more motivated. So yeah, guys, until next time, take care.